Hi, this is Kevin again, and I'd like to talk a little bit about inflation protection for your portfolio. Inflation is the rising trend in the prices of most goods and services. The historical inflation rate in the United States over the past 86 years has been about 3% per year. This means that on average, something that cost $100 last year will cost $103 this year and about $106 next year. So if your investments are not maintaining pace with inflation, your purchasing power is eroding. This consideration is especially critical for retirees. Assuming just the average inflation rate of 3%, a retiree's purchasing power will be reduced by about 25% in just 10 years. This means that a good or service that you are currently paying $100 for will cost $135 in 10 years, and in 20 years will cost you over $180. So if your investments are not making at least 3% annually after taxes, you are losing purchasing power. There are asset classes that I consider specifically suited as inflation hedges. One of them is called real estate investment trusts, or REITs. REITs are an investment trust that owns and manages a pool of commercial properties and other real estate assets. Typically, these investment funds invest in large commercial realty projects such as shopping centers, office buildings, and apartment buildings. Shares of REITs can be purchased or sold easily, just like a stock in the stock market, via exchange-traded funds or mutual funds. A REIT is an investment in a hard asset, which serves as an effective inflation hedge. As inflation rises, so will the value of the underlying REIT holdings. In addition, 90% of REIT income or rents is distributed back to the holder of the REITs, and as inflation rises, so will rents to tenants and distribution to the holders of the REITs. Since REITs do not pay income tax at the corporate level, dividends paid to holders of REITs are considered non-qualifying dividends, which means that they will be taxed at ordinary income tax rates instead of the maximum 15% for most taxpayers. In order to prevent this higher tax consequence, investments in REITs are best held in IRAs, 401ks, 403bs, or other tax-deferred investment vehicles. My next video will describe another inflation hedge, Treasury Inflation Protected Securities,